right now there's a lot of conversations of doing Roth conversions and a lot of conversation of traditional qualified plans, traditional registered, traditional IRAs versus Roth IRAs, and how do those work, and what's best? What's the best way I should be doing this? Okay, well, what I would say to you and what I say to clients is always it depends. Okay, and it really depends on what you think are going to happen in the future come tax rates. And so I want to actually give you a little bit of a tutorial on one of our tools over here called our presentation builder, and show you the screen that I like to use the best to have that conversation with clients. And so I'm going to first of all show you where to find it. And it's over here under qualified plans. And if I click through here, there's a screen on here under screen, it's screen 6. And it's a very simple, super simple conversation of just how do traditional qualified plans compare to Roth qualified plans. However, it's in screen 6 of our qualified plan module. What if you just wanted to go right here and just show somebody the difference between a traditional qualified plan and a Roth qualified plan? Like what is the consideration? What is the difference? So this is where I would come in, and what I've done is I've actually made a custom presentation just with this screen. Okay, so I'm going to show you how to do this on a couple of different manners so that you can have one-hit screens to be able to have these concepts. If there's one screen you like using a whole bunch, you can see I have my own way of doing things after being in Circle Wealth for a number of years. I have a certain way I like to present and do things. So let me show you how to use this tool to customize your software so that you can quickly get to the presentations you want to have and the conversations you want to have with your clients. So the first thing you have to do is come up here to your source presentation and go ahead and choose which one you want. You can also filter them. Okay. So I'm going to say I want to look for the qualified right there. So when you click on your source presentation, it's going to populate all the screens in that presentation in this top pane. And then what I'm going to do is I know I want this screen. That's what I found. And you can also look at it here. So we went through, I showed you how to look at the screen finder before. I'm going to just drag this down here, and that's my one screen. And I'm just going to say this is traditional versus Roth plans. And then pick the icon you want, however you want to do anything here. And let's say I'll do that one. Then I'm going to hit save. So then we've got a custom presentation saved successfully. And now when I come over here, if I come into my customs, now you can see I've got traditional versus Roth plans right there. And I can click on that one, and now it just brings up that one page, that one screen. From here, you can talk about annual contributions. For my clients who are mainly retired, they already have money sitting in these plans. So let's say they've got, I don't know, $100,000 sitting in the account, and they're, I don't know, getting ready in 1 year to start taking it out. Okay. Regardless of what year you use here, if you've got the tax rates the same, current tax bracket and withdrawal tax bracket, I want you to notice what's going on down here. So net, if tax rates are the same, regardless of how many years, what the investment return is, any of these things, these numbers are always going to be the same. All right. The difference becomes if you are in a lower tax bracket now than when you are going to retire, whether that's because you have a whole bunch of Social Security and pensions and an RMD that you're going to have to take, or you feel like tax rates are going to go up, generally speaking, over time. this can just very quickly and easily highlight the difference between what you would do and what you would have in your tax deferred bucket versus your tax advantaged bucket. And obviously, if you're going the other way and you're extremely high paid executive and you're paying quite a bit now in taxes, and you're going to not be in that position when you get to retire. So this is just a really good truth indicator. I feel like simple, super simple, 1-page screen to start having that conversation with folks around the traditional versus Roth.
Yeah, just a follow-up comment about the time of year and how to, again, address this being on everyone's mind is as people are getting their tax returns done, you should find out how much room in their current bracket they had left. Did they maximize their current bracket? If it's somebody who is actively looking to do Roth conversions, especially if they're in the lower tax brackets, that's how you can draw attention to it. If your income is going to remain relatively the same in 2022, then we know, all right, if I had $20,000 left in the 12% bracket, to me, that's a no-brainer on a Roth conversion. Go in, fill up the 12% bracket, and get that Roth conversion completed. Anything above the 12% is really a case-by-case analysis. What is your income now? What is your retirement income going to be in the future? And what do you believe the risks are? How much would you be willing to pay today versus if those rates go up in the future? But use the tax returns that are getting completed for 2021 right now as a tool for conversation. You know, the two things that I can give you to say to look at, do they have interest income, taxable interest income on their return? And then how much of their current bracket did they have left that they could have filled up with a Roth conversion? Those are two great conversation starters.